Right, how you doing, guys? I was just going to see if I could get a nicer background here. Hold on a minute. There we go. That's what we want. That's better. That's my background. Right, how are we all doing? We got. There we go. Right. Uh, Hi, KW. Good to see you too, buddy. Okay, right. Let's have a look at what we got now. I'm going to see if I can. I'm going to see if I can use this new share thing. Let me see. I don't think I can actually. No, all right, it doesn't matter. Doesn't matter. Okay, let's just let me just show you this. Why can't I share my screen? Oh, here we go. This is what I want. Right, you should still see me on the screen, hopefully. Yeah, this should be all right. Okay, this just might make it easier to describe what's going on here. So I'm just going to have a quick look through the monthly charts here because really, hi all, hi Robert, hi Bahari. Really we want to start with the monthly when we look at anything. So whenever you look at anything with trading, you really want to see what's going on, kind of like with the bigger picture. And the bigger picture is best described really with monthly charts and what's going on, whether something's at support and resistance, and whether there might be some possibility either for a reversal or maybe a continuation. So if we look to start with at the Aussie dollar, then this is the monthly chart on the Aussie dollar, and all I've got is the price action. So if we can draw the trend lines in, and really with the trend lines, we want to sort of take the most recent run. That's what I'm doing. I'm sort of looking here at the most recent run. So this thing came down, and if you think about it, this if we kind of look at it in blocks, then we would see this. We'd see a block here. This is a block. This is a trading block here. There is this trading block here, which I'm not going to be able to draw like that. So we'll do it like this. There's this sort of trading block that comes down here. That's not particularly good. Actually, let me do it a different way. Let me do it with lines. So you got this trading block here. Then you got this trading block here. There's this one. And now we've been in this kind of like situation here that's been going on. So when you look at this, you can kind of like pretty clearly see what kind of what kind of trading we're looking at, and it's a bit of a trading range. And then really what we want to find is where are the levels of support and resistance, and do we kind of like exist anywhere near it? So if we kind of look at this as a bit of a trading block here, the first thing that should come to mind, this is the Aussie dollar, is that there's some room to the upside to hit that upper level again. However, what we saw down here was something of a consolidation and then an attempt to get back above this trend line here, but a failure. And actually, does this cross this level? If we take these lows down here, it doesn't cross the level. So we know that there's some support down there, but we also know that there's this the little trend line here going along here, and that's the area where we're currently kind of testing. So what this suggests is that there are two bands here. And the first band is what's currently kind of being indicated by the May bar. And the May bar is a high test bar and then a rejection of the area. So it kind of suggests it's coming down here. But we also know that there's a band up top there. And when you look at this particular picture here, what it's really saying to you is that we're right in the middle of that trading band. And it does suggest that, on a month by month basis, if we get a sell signal on a daily time frame, then we would anticipate the currency pair starting to weaken towards the lower area. But if we get something which pops above this zone, then we could get a buy signal that would suggest that we're going to go up to the upper area. So we're right in the middle. So let's just now we know what the monthly picture is. Let's have a little deep dive into what the weekly picture suggests. And we can see that with the weekly picture now, if I put this on back on the monthly, and we'll draw these levels in on the MT4 chart instead. So there's a level along there, horizontal line here, and there is also this trend line here. So we're right in this zone. So what does the weekly suggest? Where does the weekly suggest we are? Well, the weekly actually is a bit more positive. When we sort of dive in a little bit, we can see that there's a bit more positivity. What we've really seen, with this same level here, along with the monthly, this is the monthly level here, and it looks like a high test bar. But when we look week on week, that high test bar it got broken to the upside, but we're just nicked underneath it again. So we're going to need some more information here to see whether this is actually above or we're going to stay above the level or below the level. The May bar suggests we're coming down, but the weekly price action is suggesting consolidation here. So it's not quite as clear. Now, for that consolidation area to be broken, we want to do the same thing that we did with the monthly, like draw our ranges, draw our areas. And what I can see here is a lower trend line here. And this is currently sort of like the cleanest way to look at that. So let's just take these rays off, just to see what we've got here. Okay, so that's going to come out to about there. So that's the current pattern, which actually looks a bit like a bull flag. So you got patterns within patterns. This is looking a bit like a bull flag. And if that bull flag is to play out, you'd measure it from where the bull flag started, where the pole started, right to the top of the bull flag. And then you'd copy this over. And you'd have it from the bottom of the bull flag going up. Now that would take us through the level. But we wouldn't need to worry about that. All we really care about is, does it break the top end of this? And then we'd have some room up there. This is currently suggesting on a week by week basis that we're in a bit of a trading range on the weekly. The monthly's in a trading range, but it's right in the middle. And the weekly is on a trading range, but it's tighter. So let's now have a look at the daily and see what that suggests. And you can see a lot more clearly what's happening with the daily trading range here. This is it here. And this is the trend line. This is the important level to watch. We're right in between the two. So this suggests that we could actually see a little bit of downside, maybe test the lower level, but we've got to be careful not to aim too high if we were to buy it. If it comes down here and we'd be looking for a buy, that'd be our first point of call, and that'd be our second point of call. So if it can break through and create another potential signal for a run, then we'd be looking to the upper level. But if it's gonna come here and suggest a pause, it's coming down to the lower level. So what I would read from this right now is that it's a bit too choppy to take a trade. There might be a little trend line along here. It's not very clear, is it? So this one you'd want to wait on. Now, the reason this is important is that if you choose everything, if you try and take everything against the dollar, then you've got less trades to straight away look at. So you might not want to see you might not want to see the dollar. You might just want to see how the currencies look against the dollar, and then you can then start going, okay, well, the Aussie looks strong, the yen looks weak, as an example. So you take a position on that. But from what we can see here is that this doesn't give us any real clear information. So the Aussie doesn't look like a great currency to start with. Let's have a look at the dollar CAD. Start again with the monthly. And again, the monthly is pretty good. This is a lot cleaner. Now that is a buy area. So dollar CAD is right on a buy zone. This is a lot cleaner. Now that's underneath. And it might be, you could draw it there instead. It might be, this zone's a bit more questionable. But if you always take the closing prices as first, and if you can find a trend, and you can, look, there's closing prices here and there's closing prices here with this touch, which suggests that these are kind of little false breakouts here, and we're right on that area. So here's a buy zone on the dollar CAD. So now we're starting to kind of get a picture. Okay, well, the CAD is weaker than the dollar. Now, the dollar didn't look stronger or weaker than the Aussie, so we don't necessarily want to trade the dollar CAD, but we certainly want to start looking at the CAD maybe on our sell list and something else on our buy list. It wasn't the Aussie. Now, what's happening here? Now, this is a small weekly buy bar right on top of the trend line. So this is suggestive of a potential move to the upside. Now, the one thing that is notable here, the other thing I should say is notable here, is this is very steep, and that would suggest a bounce. You know, when the price is sold off this aggressively, this would suggest a bounce. So there's some possibly some accumulation here. Now, what we want to see on the daily is some sort of accumulation pattern. And what do we have? Well, not a great deal. Not a great deal. So really with that, what we might want to see is drawing this trend line here is price action above this zone. Take out these highs. So now we've got this zone. So if we take these lines off, then what we can see here is a box. This is the box here. The lower end of the box is a valid place to take trades on a shorter term time frame if you are willing to either widen the stops or have to get in a couple of times, because you might not find the absolute low. So even though it's valid down here because of the analysis, there might be, oops, didn't want that one. There might be some further downside before this genuinely turns around. So we'd have to be a bit careful. See, this could push into this trend line here. It might even be that you need to connect down here to put your stops under these levels. The safer way to play it would be a break of this upper area, but of course the rewards aren't as good. So this is always a risk to reward game. Risks are higher down here, but the rewards are greater. You know, especially if it pops up, it's got a long way to go. The risk is lower here, but the rewards are diminished because there's not that far to go before the next resistance zone. So that's what you're always going to be weighing up. But the CAD looks weak. The CAD looks weak because the dollar looks like it's on a buy zone there. Now, of course, that will change if this does start to break down to the downside. Here, that starts to break lower. But we'd probably need June to go past to see whether we do break lower. Right now, we'd be looking for a turnaround. That's what we'd anticipate. Whether that happens, we don't know. Right, the pound. Now what we're really now trying to do is find something strong against the dollar. Now the pound looks pretty good. Let me just double check this area on the monthly. That looks like the current pattern there. There's the resistance zone there, and we're through the resistance zone. Going down to the weekly, it's tested as well. Look at that. There's a breakdown to the downside, but the bull's pushed it back up again. So this is pushed up. So the pound looks good. So what this is saying is, Not that we want necessarily to trade the pound long against the dollar and the dollar long against the CAD, but we want to put the pound CAD together and say pound CAD long is what the technical picture suggests. Let's have a look at the daily. Yeah, there's a pretty nice looking little trend here on the daily as well. It's along there. May have broken, but there's some support here. There's some support here. So for this particular pattern, the low is here. So this could come all the way back down and still be in an uptrend. So pound CAD is the first one that I'd be interested to look at next week. The euro on the monthly is also taken out. Now the euro's taken out these highs as well. On the weekly, similar picture to the pound. It attempts to get back below, but it just about recovered. It was it depends on where you draw this trend line, which is obviously there. So and then we had a nice bullish move in the prior week, and the dailies are also showing an uptrend here with another nice looking bar on Thursday, another hold bar. So the Euro CAD is also on the list. So we're looking at pound CAD, Euro CAD, and what we do eventually is we'll have a look at the euro versus the pound and see which one we think is the strongest. This is the dollar versus the yen. Now this one is also on a buy zone. So the yen might well be on our sell list. So we'll look at the pound yen and we'll look at the euro yen. Let's see what this is looking like on the weekly. A bit of a hold there on the weekly. We can see that there's a strong support line there. Price action here. So really this suggests that this area here needs to be taken out to the upside if we're going to have any confidence in the dollar yen. So weakness of the yen, basically. Now the Swissy continue. Look at the strength of the Swissy. Swissy is a very, very strong currency. And is there a trend line here? There is a little trend line down there, which might even go back a bit further. So there might be a turnaround here for the Swissy, but the Swissy looks really strong and is another break of an area here. So Swiss, pound, euro, strength, potentially sort of some CAD weakness, potentially some yen weakness. Let's have a look at on the weekly. Bit of a hold here on the weekly. But this is still in a downtrend. So this one's also definitely on the list. Now finally we'll do the Kiwi. And the Kiwi just saw a little bit of upside come in over the last month. And there might be a little bit more room. Let's have a look. Yeah, that looks okay, doesn't it? Tiny bit more room on the monthly for the Kiwi. And this trend line, it's a bit of an issue, that level there. But it might be that it's through the level, might be through this level here. Looks pretty good. So the previous week's bar was strong, and that looks like it's going to be moving in towards this area. So the Kiwi also looks pretty good. So even though the Aussie's a little bit confused, the Kiwi looks a lot better. Little bit now. There's a tight trading range here, so you'd have to be very careful. Here's the trading range here, but what we do see is this bar here. That bar there creating a higher low, sorry, a higher high, and this potentially being a higher low. The problem we've got is this area here. It didn't go beyond that area, but it's a higher low from a higher high, sorry, from here. That was a resistance point. This created a higher low. This bar here. Sorry, higher high, and we've got potentially a higher low. So the Kiwi also is something that we can look at. So right now, the technicals are kind of softly pointing to the pound, the euro, the Swissy, the Kiwi on the long side. Aussie is a little bit questionable, and the yen and the CAD on the weak side. Now, if we want to have a look at what we think is going to be the best of those to trade, let's have a look at the euro versus the pound. And the euro versus the pound has got this monthly trend line that it's kind of looks like it's gone through. The weekly has just tucked underneath it, which is not great, actually. That's not a great sign. That's not a great sign at all. Let's see what the daily's suggesting. Well, we can give this one a bit of time. It would have to take out these highs. It's got to take out these highs, but this one I would wait on just to get a clearer picture, because it's possible that this is a resistance zone, but we haven't got a sell bar. So if there's a sell bar comes in, I wouldn't trade euro pound short. I would look for the pound as my long trade. So it's really now it's filtering out which is the strongest, which is the weakest. We know the CAD and the yen are the two that we'd like to trade against. But now it's trying to find the best of the pound, the CAD, sorry, the pound, the euro, the Kiwi, or the Swissy. And let's have a look at the pound, pound Kiwi. Pound Kiwi's been in a long move to the upside. It's sustained. Where is it in the run? Well, it looks pretty good still. So this is still pretty nice trend to the upside. So you definitely be pound over the Kiwi right now. Maybe some signs of a little bit of reversal here. But you'd have to watch that trend line down there on the daily. Could be a bit of a turnaround, but this is trending to the upside. So the pound sort of is winning out at this moment in time. And then finally the pound Swiss. Long move to the downside, so the Swissie's looking really good here. The weekly, that is a reversal bar there. Right on the weekly trend line, and the daily is just under pressure. It's under pressure, but that's come through that area. So now we've got a winner. Now we've got a winner. We'll just double check the Kiwi versus, sorry, the Swissy versus the Euro, and downtrend there. So that's strong. There's no signs there, but this is still strongly trending to the downside. And then the Kiwi Swiss. Kiwi Swiss has got this monthly bar, so that might be. That looks pretty weak. It's pretty weak. That's looking under pressure there. So the Kiwi looks, sorry, not the Kiwi. The Swissy looks like the one to be on the upside, with the CAD and the yen to the downside. So let's have a look at the Swiss versus the CAD. There's the CAD Swiss here. And we're looking at shorts on CAD Swiss. So again, we're going to start with our monthly picture. Long move to the downside. I mean, the problem is when it's so sustained like this, there is a problem with time. There can be a problem with timing. So the question here was, would you want to trade this down here? Inside bar would suggest that next month we'd be moving higher. So even though the Swissy might have a better longer term outlook than the CAD, that might be just a bit of a red flag. Now these the weekly is actually under resistance, so that looks okay. That looks okay. Yeah, this does look like it's still got some downward pressure. So the CAD Swiss would be definitely one to look at for me, like next week, and then finally be the Swiss yen. Long sustained move to the upside. Weekly bars look pretty good. Looks like we've sort of like broken through this trend line here. Daily bars, you'd probably need it to break through this area to be really confident with that. So that's what the technical picture suggests. Now let's bring in our economic calendar for next week. Let's just make sure that you're seeing the right screen. even though right, you seeing this screen here? You should be seeing me point right there, round about there. Yeah, you should be seeing that screen okay. Right. Really, what we're looking for here now, sort of the technical picture suggests maybe we could be looking at the yen and the Swissy and the CAD and the Swissy. Then we'd be really looking for information along here that could move, that those currencies, capital spending, um, PMIs. I mean, this might well have a now this is quite a big number here. So GDP from Switzerland. This is a big number. So this happens on Monday. Yeah, this happens on Monday. So as soon as we start the week, we're looking for growth metrics. So we know what GDP is. It's gross domestic product, and it's a measurement of strength for a country. They are predicting the quarter-on-quarter GDP to grow by 0.4%. So because we'd want to be buyers, we'd want to see that at least in line. But if that did actually come out, positively, then we could just jump on the trade. Now, the reason that this is important is that the technical picture really is suggesting what is forward looking. What are market participants assuming is going to happen in the near term. So if they're describing through their trades strength for the Swissy, then we want to see that backed up. We want to see that strength backed up. Now, what might happen, as long as if this number isn't particularly weak, but it comes in line or it's 0.3, what might happen is we get a retracement from the Swissy. So we might see Swiss yen sell off a bit, CAD Swiss grow a little bit. Now, that would still give us an opportunity, as long as this number's not a collapse. That would still give us an opportunity to jump on board the trade. So we're still looking at those, but it's how we use this number is going to be dependent on how it's released. So that's one to watch out for. GDP from Switzerland. PMIs from Canada may well have a bearing as well. What else do we have? Inflation from Switzerland, another big one. So this is Tuesday. And this might put the mockers on taking a trade before Tuesday. We might need to see this number released before Tuesday, but doesn't mean if we don't get a setup, we don't take it. If there's a setup there, we take it, and then we're just going to look to see whether this number kind of matches the trade assumption. Now, of course, CPI from Europe, meetings from Australia, they might jump those particular currencies to the forefront. But what we're trying to do is get out in front by saying, this is what I'd like to look at more closely. I'd like to look at the Swissy more closely for some upside. I'd like to look at the CAD more closely for some downside. I'd like to look at the yen closely for some downside. The yen's a tricky one because there's actually sort of, the larger fundamental picture from Japan is that they may be going through the transition of tightening policy, which makes it more tricky to sell off. But it's still valid. GDP from Australia again, that might push that one to the into the foreground. Reserve assets we don't need to look at. And there's an interest rate decision from Canada. So big numbers coming out. Now, the Canadian the assumption from traders is that Canada are going to, now this really does push the Canadian dollar front and center, because this is the biggest number of the week. Let me just double check there's nothing from Japan. Uh, Unemployment rate again, big numbers. So we've got CPI, we've got unemployment, and we've got GDP, all from Switzerland this week, which are big numbers. There is a number coming out of the Eurozone, which might, because it was the one that looked bullish, we might actually sort of like fade that and put it in the background, because when we see interest rates decrease, it tends to lead to weaker currency. Trade balance. Yeah, these could have a bearing, but because of that interest rate announcement, that's going to be the main thing. Foreign reserves are important for Switzerland because one of the reasons the Swissy is so strong. Um, now, if you don't understand the term, do let me know. But interest rate differentials they matter. They really matter. And if you look at interest rate differentials, the Swissy should be the weakest currency, apart from the yen. It should be the weakest currency on the board. Now, as I say, if you need me to explain this a bit more, let me know. But it should be the weakest currency on the board. But it's not. And it's actually one of the strongest. So why is it one of the strongest currencies, if not the strongest? And it's because of asset ownership. It's what they actually sort of like what Switzerland's economy owns a lot of foreign assets. So this stuff is important. You know, this really makes a difference. GDP again from the Eurozone might well put that in the back burner. We probably want to see some of these numbers from Canada weaken on Friday to continue the theme of weaker CAD. But that's the sort of thing that's going to move your trade along. It doesn't mean, don't trade before big numbers or anything like that. You take the trade if you see the signal, but to move the trade along, you're going to need these numbers to be in your favor. But the assumption would be that they would be because of what the picture is. So anyway, firstly, we can make an assumption on CPI from Switzerland. And the way that we would do that is by looking at, now this is year on year, this is CPI year on year. So we can make an assumption on where it's going. Now we're looking at June 2025. Now I won't do all the maths in front of you, but I'll tell you how to do it. What you are looking to do is take 12 months of CPI data and then do your own forecast. And the way you would do that is you go back 12 months. So you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, which leads us to the previous June number. This June number is going to be deleted. It's omitted from the equation. 1.4%. Now that's a big decline. 1.4% is a big decline. So you can see that there was still quite high inflation here, 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 and here. They were all above 1%, when you consider where we are now. So these inflation numbers are decreasing. Now, previously, it said that inflation was at 0%, and it's suggesting that there's going to be a 0.2% increase in inflation. So if you look at taking this one off and this one off, this is the new one to come off, that was a climb. Sorry, that was stable. So that would leave our zero number intact. So then what we're really looking for kind of here is to sort of like say has there been some genuinely recent inflation from Switzerland, and that's when we can bring in our monthly figures and have a look. It's been pretty flat. So my assumption actually would be to see a 0.2% increase. I'm not sure. I wouldn't be that confident about that. Not to say it's not going to happen, but I wouldn't be that confident because I'm omitting last June's number, which was a high number, 1.4%. So will there be a 0.2% increase from last month? The monthly indicators suggest not. So I wouldn't be that confident with that. Now, that does put the Swissy in question on Tuesday. That doesn't mean we don't trade the Swissy Wednesday, Thursday, Friday, but that suggests to me that Tuesday may not be the best day to look at it. Now, if that number does come in at 0.2 or above, then things change again. Now, interest rate differentials, these are important, and where it will bring the Canadian dollar, the differential currently is at 0.45%. Now, the way that's worked out, the differential, is you take this number here, 2.75, and most recent CPI data. Because what traders are trying to do is get profit, from money they're holding. Okay, so there's one thing that they're trying to do, not the whole thing, but they're seeing where there is profit. Now you can't have profit if, and I'm going to see if I can draw this. If interest, where can I draw this? Let's see if I can do it here. If interest rates, I'm going to do that as IR, interest rates, which is this, is at 2.5. And inflation, which is CPI, is, I think in Canada, to my knowledge, it's 2.3. That means your interest rate differential is 0.2. Okay, so currently it's at 0.45 because it's 2.75, but that puts the interest rate differential at 0.2. And I can tell you the Swissie's interest rate differential is negative. It is actually negative. So that's not really what drives the Swissy, the interest rate differential. But this puts this at 0.2. Now, if you were going to kind of like get your get the best possible difference in interest rates, you're gonna be looking at the dollar. So the dollars, the United States interest rate differential is currently at 2.2 because their interest rate is sitting at 0.45%. Sorry, their interest rate is sitting at 4.5%, and their inflation number is at 2.3%. So they've got a 2.2% differential. So inflation will eat away the money you have every month because of prices going up. So if you for $1 you can buy 2% less, but if your dollar's in the bank, then you're actually slightly better off because of the interest rate differential. So the differential is really important, and this is going to put, if we're looking at the Canadian differential, this is going to put the Canadian differential very close to zero, which is getting closer to where the yen and the Swissy kind of exist. So that is a negative sign. That is a negative driver for the Canadian dollar. Now, if we bring this back up again, we might even find when we look down, we know the dollar CAD is on support on the monthly. We know that's on support on the monthly. CAD Swiss attempted to get back above the level but failed, but there is this inside bar kind of going on, so we might see a little push to the upside but then another failure. CAD yen looks like it's broken down somewhat here. Look at the trend line. There's the trend line. We're under that level. So the CAD yen, so actually this puts the yen at the back. Should have done this earlier. This puts the yen at the back. So the CAD looks like the weakest currency, and currently, as I said before, the euro, the euro, the pound, the Swissy, and the Kiwi would be certainly ones to have a look at against the CAD. But we had a very loose look at the Swissy. It might be that when we do a bit further of a dive into that we find that one of the others is better. But we certainly want those ones on our buy list. So we're kind of make a note of these for you guys. Oh, I know what I can do. I can do this. So we're looking at Swiss. We're looking at the pounds. We're looking at the euro. We're looking at the Kiwi. And this is on the buy side. And then for the sell side, we're looking at the CAD. And the fundamentals for the CAS is the interest rate differential. Now, of course, they might not lower interest rates. Okay, so we're looking at the interest rate differential. They might not lower interest rates. And if they don't lower interest rates, then all kind of bets are off on that one. But if they do lower interest rates, that is a reason that we could look at the fundamental picture to suggest that we can sell the Canadian dollar versus these others. And look for the best. So the CAD yen looks good for a sell. Looks better actually on the monthly than the others. The pound CAD, let's have a look. You see how the pound CAD doesn't look as good as the yen because of the levels of resistance here. Grab my line, there it is. We're right on top of this. So it's more of a sell zone than a buy zone. If it was down here, we'd be looking at this as a buy zone. CAD yen's in a much better position, on a technical basis. And let's have a look at the Kiwi CAD as well. Kiwi CAD is looking particularly weak here. Yeah, that doesn't look particularly good either. Now remember the RBNZ also lowered interest rates last week, so they were also kind of like squeezing down their differential. 15 minutes, no worries. Now, one thing that you want to be aware of when you're looking at these interest rate differentials is to know when the next release from a country is going to happen. And the way that you do that, if you look at investing.com, they've got a little list down the bottom here. No, what is it? Hold on. It seems to be frozen up. Get rid of these annoying ads. Here, you see? So it tells you when the next meeting is. So you got one in June from this States. Now the next one's June the 19th. So that leaves really 2 weeks. 2 weeks to be able to trade that one. RBA is next week. We know this one's on June the 4th. That one's not till July. Yeah, so we've got a couple of weeks really before looking at these ones. The Bank of England, June the 19th. So yeah, SNB June the 19th. So we got sort of 2 or 3 weeks where you might be able to take advantage of the interest rate differential. Okay. Any questions or comments or anything else you want us to look at before we shoot off? Anything on gold? Yeah, it's a good idea actually. Always have a look at gold. We should always have a look at gold. Gold's a tricky one. Now, really, gold is similar, really, to what we saw with equities. It's all about the time frame, because when you look at gold, oh, cool. Thanks, KW. That's awesome. Thank you. Really appreciate that feedback. Yeah. So when you look at gold, when you see this now, this is really kind of the difference between, or it can be the difference between day trading and swing trading. So day trading is what I define as taking positions throughout the day. And swing trading is when you buy a position or sell a position and hold on to it. Now, when you see a chart that is doing something like this is perfect for day trading. Perfect. I mean, it's good for swing trading, but there's no swings. So all the swings are so shallow. So the shallower the swing, the better the market is for day trading. The deeper the swing, the worse it is for day trading. But unless you're going to sort of trade the kind of back to the mean, range trading, but that's really tough. So really for day trading, what you really are after is a chart that looks like this. And the reason for that is that if you look at this, because the swings are so shallow, if we look at this period here, let's look at this period here. I will get onto my view of the longer term picture in a moment. But if you look at this period here, put it on a 4 hour chart, that's the end of it. Just shrink it down a little bit. Now look at this, look at the swings here. So let's say we got this going on. There's a run, there's a run, there's a higher high. But then it comes down, it makes a lower low. But look what happens. Higher high, there's a higher low, then it's got to break through here to get a higher high. Higher high. Even if you bought on the line, it dips down a little bit, where it stops at the lows here. So you're buying on the line, then it's going to break through there. Comes up, right on the level, then it's going to break through there. Comes up. It didn't really do a great job of coming all the way down. So this trade may well have been missed, but it's okay because it's got to break through there now to create a higher high. Creates the higher high, comes back to the level, off again. It's got to break through there. Creates the higher high, comes back to the level. And when I say comes back to the level, these levels here where it's got to break through to create the higher high. So that was the first one there. This is a buy. This is where you'd be looking to buy it. Just at the simple area where it's pulling back on a really strong trend. Let's see what happens next. Got to break through there. And you do get your reversal bar, but you're looking to trade it there again. It's got to break through there to create the higher high. And goes up, comes back, goes up, comes back, right on the level again. There's your trade. Then it's got to break through, whoops. Then it's got to break through this, which it doesn't really do very successfully. Look at the difference in sort of like, how it created these highs before it came back. This is a really good boost to the upside. All these ones here, this one, that one, this one, it didn't come back. But look how much higher they went before they came back. This one here, it's not a great level. It doesn't really sort of take off before it comes back. So there's a big difference in how the trend's strength to where it fades. So let me get rid of these lines and we'll just move along a little bit. And that actually is where the trend ended. Consolidation, didn't really break through with any kind of conviction. Trend over. So when you look at these, this area here is what you're after. And by the time you see it break through that area and that area with such strength, this whole section here is a really lovely trading area. This little section here, lovely trading area there. Because you don't know when it's going to happen, but you just have to look for this. Just look for these really, nice clean move to the upside. As soon as you see that sort of happening, you can start day trading. Faye, when you're talking about the interest rate differential, that's to do with the fundamentals. So not necessarily. I mean, yeah, the higher for a trader, yes, the higher the profit, but it doesn't mean you're going to get a trend. And the reason for that is that it's not the only aspect you look for. And this is where fundamentals get a little bit more tricky. But where it comes to the CAD and the Swissy, you can probably look at it, or the CAD and the yen particularly, you can look at it for a trade. Because the CAD, when you look at sort of other things, you have to look at balance of payments, you have to look at assets owned, global assets owned as well, which is why the Swiss is so strong. It owns, when you look at they are net buyers, they are net owners of global assets. So it makes their currency strong, even though their interest rate differential is so weak. But it's not the case for Canada. Very very different picture. So you can trade the Canadian dollar when there's that interest rate change, only for a short period, but. Okay, so that's just a quick look at swing trading versus day trading. And you could have a look even further down and then start looking from the 4 hour down an hour down to the 15-minute chart and everything else. But you got a really strong area there to look at trading. Right, now the next thing is let's have a look at the current picture. That's what we were after, right? So the current picture. Always start with a monthly. Now, my problem with the monthly, a big problem actually, is that this is so parabolic. It's so steep that you're welcome, Faye. I don't know really whether I kind of explained it that well, and the only reason it's difficult is that it's actually quite an in-depth conversation we'd need to have about differentials. It's just the reason I mention it is because we've got an interest rate decision this week, and it is a factor. It is a factor that we can look at, but it's a in-depth conversation when you look at each nation. Right, so this is the parabolic move to the upside. Now, if we sort of look at this then on the weekly, we can see that there is, a similar kind of moves where it hasn't even come back to the trend line. Trend lines tend to get tested. Now, what's really going on here is something similar. So, as we just looked at with the shorter term timeframes, this area here has not been tested. This area here has not been tested. This area here probably was. Yeah, that would qualify. That's okay. And this area here probably was as well. So, but there's a couple of levels down here that haven't been tested. That's a little bit problematic. A big long bar here. Big long bar with a big tail there. But negativity. Then the bulls try to buy it up. They look at the tail. They got battered down again. The bears did sort of get a little bit of price action, but the bulls had a really strong week a couple of weeks ago. Then the bears kind of came in and said, no, this area we're defending. So the area is being defended week on week. And that would suggest that this trend line would have to be broken if you're looking for upside anywhere around here. And a drift to the downside is probably still going to be defended. So this is still, because now the difference here is, even though we see that trend in gold to the upside and lovely for intraday positions and day trading, this would still be relevant for day trading because the trend is so strong. The trend has not been broken. The trend's strong to the upside, but you'd want this to revert. You'd want this down here, really, before kind of taking some intraday positions and seeing if you can trade it back up again. Because the move's been so strong, and we can see there are sellers here. It's pushed it down. This created an evening star that didn't really play out because the bulls came in the week after, but they got pushed down again. So for me, gold is a bit off the table at this stage until we get really down to around about the 3,075 level. In that zone, maybe down here, test this area again. Then we can look for, or maybe the trend line. Let's have a look what this trend line is. Yeah, that would be okay. That'd be okay. So maybe these lows here, which is 3,200s. So a retracement first, but definitely I'd still be looking for upside for gold. Only because the structure, I mean, even though it's parabolic and it worries me, the structure's strong. Traders still look like they're buying it. So I'd still be looking for upside with gold. But just not at this particular level. Please explain the other indexes you listed. What other indexes are they? Sorry. Do you mean the currencies? Not quite sure what you mean, Faye. Sorry. I think time might beat us today anyway. We've got oh, I see. Sorry. Okay, so balance of payments. Okay, so just a quick review of those things. So balance of payments is when you look at trade balance is volume. It tells you how many goods have gone out and how many goods have come in. Trade balance doesn't really give you the picture of the economy the way it should do. It's something we'd use, but it's not as good a picture as balance of payments. Now, the balance of payments is how much did those goods cost going out and how much did they cost coming in? Because I might sell you and I might be traders, Faye, and I might sell you a TV. And you might sell me 10 toothbrushes. So the trade balance would actually be in your favor. One thing has gone out for me, but 10 things have gone out for you. So trade balance in your favor. But the balance of payments is much greater for me. So even though I sold less goods, what I sold my goods for was higher because the TV's worth, £1,000 or whatever, and a toothbrush is worth a five or whatever, So it's a bigger difference. So that's balance of payments. And the final one I said was, I said, oh, sorry, and then assets. The what foreign assets are owned. So countries are net owners of other assets. So let's say that we are again sort of like I live in the UK and you live in Singapore, and you have bought some British property, and I bought no Singaporean property. The the assets owned from a Singaporean point of view is greater than from the British point of view. So a country's assets. So it's the same with Switzerland. It means that their assets are higher. The UK is actually net negative for assets. So Swiss citizens own more abroad than in assets, and the Swiss central bank owns a lot more foreign assets than the UK government and central bank and citizens. So that's sort of suggesting. And the reason that's important is that if you own a lot of foreign assets, if all goes to hell in a high in a whatever the basket thing is, then you can sell your assets, you can clear them out. But if you don't own any, then you're in big trouble. So it's just about kind of suggesting what the strength of an economy is. And Switzerland tends to be a pretty strong economy because of their net owners of foreign assets. Okay, which makes them difficult to trade as a currency. It's difficult one to sell the Swissy because they're so strong. Japan, incidentally, are also big owners of foreign assets. They tend to own things like dollars, which means they can rebalance their currency a lot better. Yes, some of the things exactly. Hell in a handbasket. Thanks, Roberto. Yes, Fate. Exactly that. They're three of the big things that you need to look at for sure. Okay. Right, I've run out of time. So have a great week trading, guys, and be all of the correct decisions be with you this week. Take your time, look for the right signals, and